Coming up on Retirement Today with April Roberts.
I think it's really important to find a financial advisor who you trust. And it may take you a couple of times. You may need to visit with a few advisors, but your gut will tell you who's right for you. I like my clients to have $30,000 to $60,000, pretty typical range, sitting in cash in the bank so that they can get their hands on it quickly for emergencies. This way, you don't owe taxes on the money because we haven't pulled it out of an IRA account, and you don't have to wait a week to sell something and for the money to settle. If they haven't had a second opinion, guess when they might find out that they have a bad plan? When they lose money. So I always encourage people, while we're still in a time where the market's not declining and you're not losing money, why wouldn't you want to go get a second opinion?
Now the host of Retirement Today, April Roberts.
Thanks for joining us today. We know that your time is valuable, so we have designed 30 minutes of action-packed information specifically for you and your retirement. Retirement Today starts right here, right now.
Hi, everybody, and welcome to this week's Retirement True or False. I am accompanied by April Roberts and Paul Roberts of Roberts Wealth Management. How are we doing today?
Mark, we're doing awesome. How are you?
Doing well, thank you. And my first question is for you, April, and that is, if you have already retired, then is it too late to get a second opinion about your portfolio? True or false?
False, Mark. With our clients, about half of them are retired and half are preparing for retirement. So I love it first when clients come to us well before retirement so we can help them get situated. And also, sometimes people have retired, but they've never set up a retirement income plan. So it's always great to get a second opinion so that you can better understand how you're invested and then decide if you need to make changes or not.
Paul, would you say you have some retirees that come in who thought, man, I wasn't going to be able to make a change, but in fact, you could make a change for them?
Oh, absolutely. Most people don't really understand what they own because they're out there just buying products or being sold products, and they're not buying into a strategy. So they think they're kind of stuck with this or that when they read about their products. And we do a total analysis of that for them and give them options.
So April, you can in fact change your strategy. And I think this is really important because again, having done this with so many advisors, there are a lot of people out there watching today who are saying, I'm already retired. I've already punched the clock. There's nothing that I can do now to change my strategy to make my situation better.
Well, Mark, unfortunately, if they haven't had a second opinion, guess when they might find out that they have a bad plan? When they lose money. So I always encourage people, while we're still in a time where the market's not declining and you're not losing money, why wouldn't you want to go get a second opinion? If a doctor told you that you needed to have a heart transplant, would you want a second opinion?
Absolutely, I would.
Why would it be any different with your money and it potentially
Great
running
analogy.
out?
Great.
Thanks, April. Paul, my next question is for you, and that is, most retirees are paying too much in taxes on their investments. True or false?
That is true because there again, I'm back to the people are buying into products and accounts and not strategies. If you buy into a strategy, one of the second tier of the planning is the tax planning, got income planning, and then we have risk management. If you do all of those three, you will not find yourself in that situation there where you're ignoring taxes. Most people just buying products and don't get enough tax advice.
I know, and it seems to me like the majority of people out there are actually taking tax advice from the person who's preparing their tax returns. And whether that's a CPA or just someone who prepares tax returns, and their job really is to sort of look at things reactively rather than look at things proactively, correct?
Well, correct, Mark. And if they're only charging you to process your tax return, then they're probably not doing tax strategy for you because that would be an extra charge. So I think you know if your tax preparer is doing extra strategy for you. And again, for people about to retire in retirement, tax planning is extremely important because money that goes to the IRS, we don't get back.
And here's another thing too that I know I've heard a lot of times, is that people are sometimes fearful that those tax strategies may not be part of the tax code. That in fact, well, you might be making these up, and there's that sort of fear that, oh, I don't want the IRS looking at me. But Paul, correct me if I'm wrong, there are a lot of wonderful tax strategies out there today for retirees and pre-retirees that are 100% in the tax code.
Definitely. There's black areas, there's white areas, and there's gray areas in the tax law. Some of the gray areas have not been proved or disproved, and aggressive tax planners should take that in favor of their client because they're not actually breaking any laws or any rules. I think people overfear about that. I think most professionals are going to keep you on this side of the bars, you know what I'm saying, not the other side of the bars.
Sure.
So they do need to be more open-minded about tax planning.
Great. April, my next question is for you. Banks are the best place to keep your money safe, true or false?
I'm going to say false, Mark. It is one place to keep your money safe. However, there are multiple places, and the answer is going to be it depends. It might be the best place for some people, but not the best place for other people. And we all know that the rate of return you're receiving at the bank today is not exciting.
And you know, it's too bad for savers, right? Because they've worked so hard, and the bank was such a great option for so many years. Paul, tell me about another great option today for those savers who are looking for just a straight up nice return on investment.
Straight up nice return on investment is available in such things as some government bonds, some treasury bills that pay more than CDs do now, and in insurance type annuities. When I mean insurance type, I mean fixed index annuities and fixed annuities that come under insurance laws, not variable annuities that come under securities laws because they're considered a security, okay? So there's numerous areas open, and it's according, again, to the strategy or the situation that's called for with that particular client.
Paul, April, thanks so much. Don't go anywhere. We got a lot of great stuff to come. You're watching Retirement Today with April Roberts, because you deserve better.
It's your retirement. How will you live it? How will you be remembered?
Will you be able to send me an invitation?
Will you be there for my ball games?
Will you teach me your values? You'll be able to play with me.
Oh, help me go to college. How will I remember you?
Have the retirement you dream about. AskAprilRoberts.com.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you will be able to get a clearly defined retirement income plan is to talk to an independent financial advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you will receive a free complete planning review. There is no obligation and no cost if you have at least $250,000 saved for retirement. Here's what you will receive: a free report to sort through your current advisor's cost, a tailored plan to guard your investments, tax analysis to reduce liability and increase cash flow, and a custom income plan to boost retirement. Plus, you'll receive a budget assessment to help manage your cash flow. So call now for your free, no obligation financial review.
You're watching Retirement Today with April Roberts, because you deserve better. Hi, everybody, and welcome to another edition of AskAprilRoberts.com, where you, the general public, email in your questions for April, and she answers them here on the show. April, how are we doing today?
I'm doing wonderful. How about you, Mark?
I'm doing great, thank you. And my first question today is from Martha in Spring Branch, and she writes, I'm in the middle of a divorce that's going to yield about $500,000, which represents my portion of my husband's IRA and the funds from the sale of our house. He always handled all of our investment decisions, and I don't have any idea what questions I need to be asking. Where should I start?
Martha, that's a great question. First of all, I'm sorry to hear about your divorce. I think you're already starting in a great place because you're asking questions and you're looking for advice. While it can be quite overwhelming to suddenly take over finances when you haven't already, it's absolutely doable. Mark, I think the first thing that people should do is really talk to friends and loved ones, people you trust, and see who they trust to help them manage their money. That's always a great place to start. Another great place is by watching the show, attending seminars, and playing around on the internet. There's lots of information out there, Martha, and there's a great guide we have in the office that says a divorcee's guide to the best questions to ask. We're always happy to share this information, and most financial advisors have similar information. So first and foremost, I'd start by asking friends and family members who they trust. Second, I'd do exactly what you're doing and try to educate yourself as much as possible. There's lots of information out there. And finally, I think it's really important to find a financial advisor who you trust. And it may take you a couple of times. You may need to visit with a few advisors, but your gut will tell you who's right for you.
You mentioned that document, April. Maybe you could mention the name of it again for people who might find it appropriate to ask for that. And I know you'd love to send that out to them, probably for free. What is in that a divorced person might find important?
Well, great question, Mark. So this guide is simply a checklist to help you consider different things. So one, I would start with your budget. I find that most people don't really understand as a household what they spend. So take the average of a 3-month period and see what you spend each month. That's number one. So there's a financial inventory to help you understand how much you spend and where your different assets are. The second place I think you want to consider, Martha, is my estate plan in place? Because if your marriage is dissolving, obviously we need to change some things in your wills and beneficiaries. And then finally, the right questions to ask a financial advisor. You want to make sure you're getting a trusted advisor who's doing what's right for you.
Thanks, April. If you'd like to have your question answered here on the show, it's really simple. Just go to askaprilroberts.com and we'd love to answer your question. Thanks so much. Stick around, a lot of great stuff to come.
Today I'm going to share with you my tip of the week. I'd like to talk to you about banking. I know I'm not a banker. However, I think that looking at your bank account can help in a number of ways when we're doing your retirement income planning. The first way is to make sure that you have enough rainy day money. My clients are often shocked to hear that as a retirement income planner, I recommend that they keep some money in the bank. And the reason they're obviously shocked to hear these days is that interest rates are extremely low. In their minds, they think, I have to grow my money so that I can stay retired and have enough income. Well, don't worry about that. We're going to help set up your systematic income, and we're going to set up another bucket for you for growth. Why it's important to have your rainy day money is for emergencies. Imagine in the middle of Houston, hot summer, that your air conditioner goes out. Do you want that fixed that day or a week later? This is where your rainy day money comes in handy. I like my clients to have $30,000 to $60,000, pretty typical range, sitting in cash in the bank so that they can get their hands on it quickly for emergencies. This way, you don't owe taxes on the money because we haven't pulled it out of an IRA account, and you don't have to wait a week to sell something and for the money to settle. A good rule of thumb is to look at about 6 months of expenses to come up with this number. The reason I give such a broad range is everybody's life is different and everybody has different potential emergencies. But it's extremely important that before you retire, you make sure you have that money set aside in the bank. Second way I'd like to look at your bank account is simply this. It's extremely important to plan well for retirement to know how much money your household spends in a month. If you don't know this, and a lot of my clients are engineers, they have their spreadsheets and they know this on the top of their head. If that's not you, what I recommend is looking back at 3 months of statements, credit cards, and bank statements, and just find your average amount that you spend. Generally, 3 months gives you a good idea. And then think, What else do I spend? At the end of the year, do I write a check for property taxes? Do I write a check for home insurance? Is there any other large expense that comes out of pocket that doesn't show up on these statements? When you come in to see us or any other retirement income planner, knowing that you have your rainy day money setting aside and knowing exactly how much you spend in a month, it allows us to do our job extremely well. If you'd like more information, please feel free to visit our website or give us a call at the office.
You're watching Retirement Today with April Roberts, because you deserve better.
Remember when life was simpler? When things didn't move quite so fast, and the world didn't seem so complex? Remember that? We do. And as the world around us has continued to speed up, becoming more complicated, and still a bit uncertain, we have managed to keep things simple, providing sound, easy-to-understand financial advice and customized roadmaps for the road ahead, from tax reduction strategies, investment advice, and guaranteed retirement income you cannot outlive, backed by the claims-paying ability of insurance companies. We can be your single point of contact, a single call, a voice you recognize well, and a partner who can be by your side for the entire journey. We can't stop the world around us, but we can help ensure you're prepared for what's to come. To schedule a no-obligation meeting, simply contact us today.
You're on the back nine heading for the clubhouse. Your dreams of spending time with family and enjoying retirement are just within reach. What happens if you end up in the rough? In these uncertain times, it's crucial to be prepared with sound advice. Roberts Wealth Management is one of the premier retirement income planning firms in Texas. For a complimentary consultation, call 713-322-6600. Roberts Wealth Management, helping you create a winning strategy.
You're watching Retirement Today with April Roberts, because you deserve better.
This week in the office, I brought on some wonderful new clients, Joe and Kim. When Joe and Kim came to me, they were very distressed. They'd been with their financial advisor for a number of years, and when they came in the office, I said, "Hey guys, I really like you guys, but I'm confused. If you've been so loyal with this advisor, why are you looking for a change now?" So what they shared with me was that now that they were set to retire, they had a large variable annuity that they had always thought would provide income in retirement. In their mind, annuity equaled income. Well, unfortunately, when they went to set this income up, they discovered that their variable annuity did not have what's called an income rider. An income rider is an additional benefit added onto the annuity contract that you pay a fee for. There are other types of riders as well. So while they thought they could get systematic income guaranteed for both their lives, they found out that this just wasn't true. Instead, what their annuity guaranteed was that whatever the highest value was at the end of 10 years, they would be guaranteed to have that. But that did not provide income for them as they'd planned. So what we did was call their company together, figure out exactly what they had and what the benefits were. They had some penalties for making changes, so we had to understand the penalties and costs. And then what my team and I was able to do was to look for an annuity that did have the benefits that they were looking for and one that overcame the penalties of leaving their current annuity. When I lined up the pros and cons of staying where they were with the pros and cons of moving to what we advised, they were extremely happy to move their assets so that they could set up this guaranteed income stream like they thought they had. And now they're planning for retirement and planning to move to the hill country and enjoy the rest of retirement, knowing that they're getting that systematic income in retirement. Had they not sought out a second opinion like they did, they would have been stuck with an investment that they thought had benefits that it actually did not have. And to add insult to injury, when we called the company, we found out that they were paying 3.5% fees on this variable annuity that did not even have the benefits that they thought they'd purchased it for. In the end, all is good. They were made whole and they have systematic income, but I think you can see why getting a second opinion is extremely valuable before you move into retirement, or even if you're in retirement. If you have questions or would like the second opinion, please feel free to visit our website or give us a call at the office.
You're watching Retirement Today with April Roberts, because you deserve better.
Life, a series of moments. A touch, a look, a laugh. Successful people. It might not be superior imagination. It just might be superior retirement planning. Imagine what's next. Plan today, own tomorrow.
Call Roberts Wealth Management, 713-322-6600.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you will be able to get a clearly defined retirement income plan is to talk to an independent financial advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you will receive a free complete planning review. There is no obligation and no cost if you have at least $250,000 saved for retirement. Here's what you will receive: a free report to sort through your current advisor's cost, a tailored plan to guard your investments, tax analysis to reduce liability and increase cash flow, and a custom income plan to boost retirement. Plus, you'll receive a budget assessment to help manage your cash flow. So call now for your free, no obligation financial review.
You're watching Retirement Today with April Roberts, because you deserve better.
Thanks for joining us today. If you have any questions, feel free to visit our website or give us a call in the office. And remember, a good retirement income plan is the start to your happy and smart retirement. Have a wonderful day, and we'll see you next week.